this is shale. The numbers are absolutely amazing, and the way that big integrated oil companies have transformed themselves by accessing these fields is absolutely incredible.
This does seem to be the quarter guy where big oil learned to make shale work. I mean, previous forays into shale had been limited, but these companies have really grown and added weight in the Permian, the most productive field in the US, and they've really learned how to make it work for them. And as you say, that's really coming through in these blowout numbers that we've seen from both of them today. Exxon has grappled with falling production. It got production up above 4 million barrels again, and it beat earnings expectations by almost 50%.
Are these massive oil companies, though, becoming more nimble as well? So shale, previously you'd invest in an oil field and you'd say, right, we're investing money into this. It's going to be a 20-year investment, 30-year, massive long-term investments. Now the investment horizon's coming into 2, 3, 4, just completely different order of magnitude.
That's exactly right. I mean, especially with Chevron. Chevron really pointed to the fact that most of their growth is going to come from projects which just take a couple of years to develop. Exxon's a little bit different. They're going to make a very big play in Guyana, which is a classic, enormous Exxon offshore project. But yes, very much so. This is not where big oil companies like Exxon and Chevron, the kind of projects that they would play in. They would do huge engineering projects that took billions and billions and years, and this is very different. But what's clear is that they've learned to make it work.
How much can dividends continue to grow? Will they've been growing and growing and growing at such a rapid clip? They've been spoiling investors almost.
They're going to be a little bit cautious. I mean, we should bear in mind where the oil price is. Yes, these are very good numbers which have beat expectations, but oil prices fell in the fourth quarter, and they're done a bit better in recent weeks, but they're still lower than they have been, and that will feed through. And I think the oil companies will be conscious of making decisions that they can't afford to keep as the cycle develops. They've both outlined, especially Exxon has outlined a plan to spend a lot more money on CapEx this year, so they will be wary about raising dividends too fast, because they don't want to have to then pull back if we get another downturn in oil prices.
Now, there's a little bit of a battle for top market capitalization for some reason, even though some of the top ones are very close to each other. Do you see any little bolt-on acquisitions or any kind of M&A activity in order to have that happen?
No, I don't think people will do deals for that reason. I do think that, for all these companies, the challenge is always to replace reserves, and a lot of that has been done in the Permian. I mean, one of the reasons that Exxon is doing so well on the Permian is that they bought a whole group of fields from the billionaire Bass family for $6 billion a couple of years back, and that's this quarter we've really seen that transaction kick in. I think if they have opportunities to really consolidate and grow their position in the Permian, there are cost benefits of doing that, and they may add if those opportunities arise, but I don't think they're going to do an M&A just to take top spot.